Hayley Woodin of Business in Vancouver joins us now. Good morning, Hayley.
Good morning.
Well, the federal government releasing its fiscal update yesterday. It had a lot of good news and with higher than expected economic growth.
That's right. Canada has had a very hot year economically. Growth is revised upward to 3.1% this year. That's more than a full percentage point higher than what was previously expected. And as such, we're going to be seeing a smaller deficit for this fiscal year. It's about $9 billion smaller. And moving forward, looking ahead, we'll still have deficits from the federal government, but they're all expected to be smaller as a result of this growth. Also, some new spending. We have spending on the child benefit plan coming later next year. Also, spending going toward the working income tax benefit. Previously announced too, things like small business tax cuts all being factored in again into this most recent fiscal update. All in all, we heard from Minister Morneau yesterday. Part of this is to share some of the gains with the Canadian public and to relieve anxiety from lower income Canadians who may be feeling like they're left behind in such a hot economy that's moving forward. Another theme I want to highlight is risk. Of course, we're going through that NAFTA renegotiation, things like softwood lumber, other trade issues on the table as well. But Morneau downplaying that a little bit, saying trade with the United States is going to move forward under whatever circumstances. So the full impact of that lessened a little bit, at least in his statements yesterday.
So given the strong economic situation Canada's in, how do you think that's going to affect the interest rate announcement today? Bank of Canada making the announcement. Do you think it'll raise interest rates for the third time this year?
That's a good question. The consensus seems to be no. A lot of economists and analysts noting that Canada has experienced strong growth, but they're hoping that the Bank of Canada is now going to take a pause after those two rate hikes and wait and see the full impact those hikes have had on the economy. The first half of the year, very strong, but new data suggests that the economy is starting to cool off a little bit. We're seeing that, for example, in the housing markets in Vancouver and Toronto, as well as data, whether it's inflation or retail sales, other trade data as well. Now, that doesn't mean that a third hike isn't on the table for later this year or early next year. Again, consensus from economists seem to be that they're looking to early next year once we have more data about how the second half of the year has really played out for the Canadian economy.
Well, we'll find out soon. That announcement in about half an hour. Thank you, Hayley.
Thank you.